While the markets take some wild swings, gold has pushed steadily higher and higher. It's up about 10% since the beginning of the month. Will it go even higher? Will we reach 1,800? Can you profit from it now? George Gero is Vice President of Global Futures and a precious metals strategist at RBC Wealth Management. And David Morgan is the editor of the Morgan Report. Good morning to you both. Thank you for joining us.
Well, good morning. Good morning, Simon. I've seen you on the floor of the NYMEX. I've been there for 35 years at least.
Good. George, it's extraordinary how bullion continues to track higher, despite the fact even we had the margins raised over there by 22% on Thursday. Where do you think we're headed for?
Well, first of all, I think the margin raise did not affect people who are old longs, meaning they own it at much lower prices because they've got tremendous equity. The central banks that have been buying gold recently certainly don't care about margin rates. And believe it or not, if you take a look at nimble traders have been going into platinum and palladium because there were no real margin increases there. And so today, you've got a nice up in platinum and palladium as well. Gold probably will have that 1,800 once more, but it seems to have trouble getting past it. Last time it was there, wasn't there for too long. And then, of course, if the stock market does straighten out, the asset allocators are going to move money to where the best performance is.
So where will that be?
Well, that is a good question. I think we're seeing inflation. If you look at other commodities, they're all up. And it looks like stimulus on two continents is going to hasten economic recovery, which is why platinum and palladium are up, by the way.
Well, I hope you're right.
And I think probably it means that general inflation, if you wear clothes, eat, drive, you'll see inflation next year.
David Morgan, Wells Fargo Private Bank is warning its clients that gold has, quote, reached a level of a speculative bubble and that they should be wary of having significant exposure to it, quote, with very little warning, the bottom can drop out of gold prices, says the bank. Should people be aware of that, David? Is that your view?
No, not particularly. I mean, the view I have is that it's not gold that's in a bubble, it's the debt bubble. It's the increasing of the burden of governments printing more money, and that's the real problem. Gold's just reflecting that reality. So I think the current case is that the United States finally got the message with the downgrade by the S&P to a lower credit rating, and I think this is going to put some stimulation, you might say, into the political system that may actually cause some action to take place. If the U.S. can get its debt house in order, I think you'll see some leveling off in the gold price. If that doesn't occur, you probably see the opposite.
David, my question to you is gold is viewed as a safe haven. It has been, but recent developments have obviously the fact that Simon can cite this report saying that the floor from gold can drop out. Can it actually be considered these days a safe haven if it is seeing so much volatility to the point where the CME has to step in and raise margin requirements?
Certainly all markets go up and down, and it's true of gold as any other market. It's certainly not the safe haven it was, as George indicated, years ago.
Fortunately, we'd run out of time. George, thank you for joining us. David, if you can still hear us, thank you as well. I think we kind of got the gist of where both of those gentlemen were headed.